moving forward here to financials, which is one of the, I would say a lot of, well, I think they're all very, very important though, but if you don't have personal credit, but you have the financials, you're able to get a loan. If you don't have the financials and you have personal credit and business credit, there's a lot of different opportunities for you to get qualified for a loan. So making sure that the health of each one of these pillars is what going to determine how much money you're able to qualify for. By getting deep right now into the mechanics of financials, of what the banks look for. So very, very common actually. A lot of clients, let's just say, I ask them, so how much money are you looking for? They're like, I want $1 million. Okay. The calculations for banks and what they use, at least for the major ones, is anywhere from 10 to 20% of your gross sales. So if you made $1 million, now a bank will give you typically on average about 10% of that, which would be $100,000 in a loan amount. So if you're asking for $1 million and they're giving you 10% of your sales, you're going to be over leveraged if you go and hit that $1 million. So it's really risky for a bank to give you that amount. So that's typically 10 to 20% is the gross calculation on average. Now, if we're going full documentation, they look for 2 years of financials. Now, a major bank wants you to be in business for 2 years because it's going to show a history of your growth. All right. So your business tax returns for, let's just put tax. Quick and easy. So 2 years business tax returns, we look at the gross, we look at the net, we look at personal, the gross, and the net. Now sometimes banks will look at what we call the global coverage or a global exposure of how well a business is growing. So a lot of times with the challenge that I always face is you make $1 million, but you want to write off everything. 99% of it is expenses. Of course, the bank's not going to want to lend money to you because if you're only profiting 1%, the banks are not in the business of losing money. Now, there's certain things we can do by adding back depreciation and interest, but that's the high-level mechanics for what we look for, right? So they calculate the business and the personal. When you go for a mortgage, they always want to look for what? 2 years history. So for business loans or any type of, it's always a 2 years. It's a rule of thumb. Now, interims, right? Interims means that, what are you doing, year to date? So look at your profit and loss and your balance sheet. And so this is where we look at banks like to see growth. So if you started out in your year one and you're at $200,000, year two, you're at, $500,000, and then all of a sudden you hit, 1.1 or 1.5 million, in your year to date, banks like to see that steady growth because if you go from 100 to 5 to 1 million, what's the next year going to be, right? 2 million, then 5 million, and 10 million. Then all of a sudden you grow up and you be 100 million. The bank wants to be an essential part of that. So banks want to lend to people who don't need money, but also like to see projected growth. So it's important to understand and to compile that story when we are delivering, presenting to one of our major entities or the major banks when we move forward with that. Now, a personal financial statement is your personal information, your assets and liabilities with who do you have, personally. A lot of banks like to see personal liquidity, your 401k, stocks and bonds, etc. And that's just information that they typically ask for when you're going full doc. Yeah, business debt schedule. So how much business debt are you in? Okay, did you take out some of these merchant cash advancements, which they're known for going for second and third, fourth, fifth. I've seen even as long as 13 positions behind, the first. So banks, major banks at least don't like to be in second position. And a UCC filing, which we're going to get into another video, is a lien that gets placed on the company's business profile, which can encumber certain assets or letting the world know that they have a loan, based upon what they're lending you. Assets. It's a very when I look for and I qualify and underwrite a file, I ask them, do you have any assets? Because maybe if your business credit is not so strong or your personal credit is not so strong, or maybe even your financials are not that strong, but if you have assets that if you default, it's collateralized, right? They take the asset away. So it's a lower risk factor for a bank to look at and see and ask you if you have any assets. Now, accounts, so what are some of the acceptable types of assets that banks like to see? You have accounts receivables, your inventory, real estate, and there's a few other qualifying aspects for assets. But typically, if you're going to ask for more, 150 or 250 and above, a bank's going to want to see your accounts receivables aging report, right? Who owes you money, and can we attach our lien to those particular assets in case you default? Okay, so cover that. Now, bank statements. What I found for major banks is that they don't typically ask for, bank statements. Some of them do. Very, very heavily used in the alternative lending space. Merchant cash is one of the big ones that they'll look for, 3 to 6 months of bank statements. What do they look for? They're looking for cash flow. Okay, in another video, I'm going to be describing something called a debt service coverage ratio, diving deep into, can you afford that? But merchant cash, they go through how much cash flow are you looking at, usually for 3 to 6 months. Okay, so here's really high level of, business, obtaining a business loan. If you're looking for personal, very, very similar, but without the business, personal, 1 or 2 years in your personal funding aspect. If you're looking for a personal loan. For business, this is what they look for. This is what at least the major entities look for. Going through and slicing down and seeing if you qualify, or is there any factors that can determine your approval or your denial. Hope this helps.